Question 1. In light of recent developments in asset-light strategies across global hotel brands, how should a hotel company's asset management team approach competitive benchmarking to optimize owner returns in full-service urban property? A. Focus only on internal financial statements to identify opportunities for operational efficiency. B. Compare key performance metrics. E.g. RevPAR index, GOPAR within its brand to ensure compliance with brand standards. C. Analyze star report indexes and PRI relative to well-constructed competitive set adjusting for asset intensity and market positioning. D. Use the property's average room rate and occupancy trends to match competing extended stay properties, regardless of property class. Answer. Correct answer. C. Explanation. Asset management teams aim to maximize returns for ownership in an asset-light model where the brand doesn't own the property. Benchmarking becomes even more vital. The STAR report provides key metrics. Market Penetration Index (MPI), Average Rate Index (ARI), and Revenue Generation Index (RGI) are essential to assess performance against competitors in similar market segments. The competitors must reflect comparable scale, product type, and location adhering to STR rules, focusing solely on internal metrics. A. Brand compliance. B. Or mismatched comp sets. D. Undermines accurate analysis. Source. STR STAR Report Guidelines. Question 2. During the process of evaluating hotel performance for a potential acquisition, which of the following best reflects the importance of constant currency analysis in international markets? A. It ensures consistency in ranking performance within local market competitive sets. B. It helps eliminate distortions caused by foreign exchange fluctuations when comparing historical revenue trends. C. It aligns the local occupancy data with brand-level occupancy goals. D. It ensures that the local government's economic data is reflected in STR reports. Answer. Correct answer. B. Explanation. Constant currency analysis is critical in international hotel performance evaluation because it neutralizes the effects of exchange rate fluctuations over time. This allows analysts and owners to understand underlying performance trends in RevPAR or ADR independent of external currency factors. Option A confuses local competitive ranking with currency adjustments. Options C and D relate to occupancy or macroeconomic indicators, not currency effects. Reference SDR Global Definitions, the Hotel Valuation Standards. Question 3. As demonstrated by the case of Is Rivera, a revenue manager at a luxury resort in the Caribbean, she is preparing her monthly STAR report analysis. Her resort's RGI has decreased consistently over 3 months despite stable occupancy and other indexes. What is the most plausible explanation? A. The market supply of rooms has declined, artificially inflating competitor performance. B. Competitors in her comp set are increasing total room revenue through enhanced ancillary services. C. Her property may be underperforming in high-demand periods relative to comp set, leading to RGI compression. D. The competitive set's RevPAR is decreasing, causing the property's index to rise falsely. Answer. Correct answer. C. Explanation. A declining revenue generation index (RGI) despite stale MPI and ARI often suggests that the hotel is not optimizing revenue capture during peak demand, indicating missed revenue opportunities. The STAR report's day-of-week segmentation may reveal underperformance during high ADR or high occupancy nights. Option A is incorrect because supply decline would benefit all market players. Option B relates to TRevPAR, which is outside STAR's core RevPAR focus. Option D is contradictory as RGI rises when comp RevPAR drops. Guidelines. STAR Report Interpretation Manual. Yes. Analysis Framework. Question 4. By evaluating segmentation metrics in a STAR report, what conclusion can a hotelier draw if group business ADR is significantly higher than transient ADR, yet overall RevPAR remains below the comp set? A. The hotel should increase group bookings to enhance the ADR further. B. The transient segment is underperforming in occupancy or rate relative to competitors. C. The hotel is over-reliant on contract business that skews RevPAR downward. D. Competitors are achieving higher occupancy on weekdays only. Answer. Correct answer. B. Explanation. If group had a transient adder, a yet repar comp set, the transient segment likely lags either in rate or volume, since repar combines occupancy and adder. Even a strong group adder won't offset weak transient performance. Contract business, C, may contribute but is not stated. A is flawed as it assumes more group will fix repar without segment balance. D, lacks supporting context. Reference SDR segmentation benchmarks, revenue management principles. Question 5. When faced with a proposal to adjust the competitive set at the Hilton Downtown managed by Mr. Liang, which factor should be his primary consideration under STR guidelines? A. Removing higher performing hotels to improve the property's MPI and ARI. B. Including hotels with similar room counts regardless of market proximity. C. Ensuring the comp set includes at least 4 hotels and does not contain more than one from the same brand. D. Aligning the competitive set with properties that share pricing and service levels. Answer. Correct answer, D. Explanation. The SER competitive set guidelines prioritize similarity in pricing, product, and proximity, while minimum set rules apply. At least 3 competitors plus 1 and no more than 40% from a single brand. The most important concept is comparable market dynamics. A is unethical and violates data integrity. B ignores critical factors like pricing and location. C is partially true but not the most important concept. Source: SDR competitive set rules as our confidentiality protocol. Question 6. The effectiveness of benchmarking using MPI-YARA and IGI lies in A. Comparing total revenue streams including spa and casino income. B. Enabling fair comparison of repar performance while accounting for occupancy and rate deviations. C. Aggregating brand-level data to regional standards for SDR reports. D. Demonstrating profitability potential based on staffing models and labor costs. Answer. Correct answer, B. Explanation. MPI Market Penetration Index evaluates occupancy, ARI, average rate index, assesses ADA, and RGI Revenue Generation Index combines both for RevPAR performance. These indexes allow standardized benchmarking critical for performance management. A. Refers to TRevPAR, not benchmarking. C. Applies to macro-level analysis, not property benchmarking. D. Relates to profitability, not RevPAR indices. STR benchmarking concepts. CHIA exam content outline. Question 7. Given the circumstances of Mr. Delgado's independent hotel in a tertiary market, how should he interpret sufficiency in his monthly star report when 3 of 7 hotels in the comp set fail to report data? A. The report becomes invalid and should be disregarded entirely. B. SDR will use estimated data to preserve report sufficiency for analysis. C. The report sufficiency rule will be unmet and comp set results may not be shown. D. SDR aggregates historical data to replace missing competitor data. Answer. Correct answer, C. Explanation. The sufficiency rule in TR star reports requires a minimum of 3 reporting hotels in a comp set to produce valid aggregated data. If fewer report, SDR may withhold the comp set data to protect confidentiality and maintain integrity. SDR does not use estimates or replace with historical data. BD. The report isn't entirely invalid. A. But comp set metrics may be omitted. Source: SDR confidentiality rules, star reporting standards. Question 8. Based on the information found in trend reports, which analysis technique provides the clearest insight into the long-term performance pattern of a hotel's RevPAR? A. A comparison of weekly RevPAR trends over 2 consecutive weekends. B. A year-over-year analysis using a 12-month moving average. C. A benchmarking of occupancy rates against the state average. D. A scatter plot of ADA and occupancy on national holidays. Answer. Correct answer, B. Explanation. 12-month moving averages smooth short-term volatility and reveal long-term RevPAR trends ideal for strategic decisions. Weekly data. A. Is too narrow. State occupancy. C. May not reflect property-specific context. Holiday scatter plots. D. Might reveal anomalies but not trends. Trend reports emphasize consistent sample data and monthly aggregation to ensure accuracy. CHIA syllabus. A trend reports guide. Question 9. The development team at A parent company is reviewing pipeline data for expansion. They notice the number of rooms under construction has sharply declined, while rooms in final planning have increased. What does this shift most likely indicate in terms of market conditions? A. Market saturation that discourages new construction starts. B. Improved investor confidence and imminent boom in openings. C. Lag in building permit approvals causing temporary delays. D. Downturn in consumer travel demand causing cancellations. Answer. Correct answer. A. Explanation. A drop in under construction paired with rise in final planning typically signals hesitation in project execution, often due to market saturation, financial caution, or regulatory bottlenecks. This may reflect developers pausing before committing capital. B is contradictory. C could play role but isn't the primary explanation. D refers to demand, not pipeline phase movement. Reference pipeline definitions. CHIA development data. Question 10. The traditional approach to hotel class segmentation defines properties based on which of the following STR classification methods? A. Service level assigned by guest reviews and online scores. B. Ownership structure and franchising model. C. Achieved ADA in local currency compared to national ADA bands. D. The number of available rooms and public space footprint. Answer. Correct answer. C. Explanation. STRU is achieved ADA, average daily rate, to classify hotels into scale segments, luxury, upper upscale, etc. This method provides quantitative comparability across markets, unlike subjective guest ratings. A. Ownership. B. Or physical size. D. Classification is ADA-driven, not based on hotel design or branding alone. Source: SDR scale and class definitions, CHIA and categorizations. Question 11. To illustrate this point, a global hotel chain analyzes its star report and finds that its ARI remains high while MPI fluctuates below 90. Which performance improvement strategy is most advisable? A. Focus on rate management by offering deep discounts across all segments. B. Maintain current ADA levels and invest in increasing direct bookings and distribution reach. C. Increase reliance on group bookings to elevate overall occupancy metrics. D. Remove low-performing hotels from the competitive set to increase MPI artificially. Answer. Correct answer. B. Explanation. A high average rate index ARI combined with a low market penetration index MPI implies the hotel charges premium rates but fails to capture its fair share of occupancy, maintaining rate strength while boosting occupancy through better segmentation, direct booking strategies, and improved distribution is optimal. Discounting A. Risks undermining ARI. Artificial comp set manipulation. D is unethical and breaches SDR rules. Reference: SDR index guidelines, revenue management best practices. Question 12. While examining the monthly star report at a resort in Bali, Coptree observes a consistent MPI above 100 but an RGI of 92. What does this likely indicate about the property's performance? A. The hotel has rate disadvantage compared to its competitive set. B. The hotel is not open during peak weekends. C. The comp set is lower due to data reporting inconsistencies. D. The hotel's occupancy rate is too low to calculate RGI accurately. Answer. Correct answer. A. Explanation. MPI 100 means strong occupancy share, but OGI 100 indicates total RevPAR is underperforming relative to comp set, likely due to lower ADA, which brings down overall revenue performance. STR AGI formula blends MPI and URI, thus an RE 100 drag OGI down. Options B, C, and D are distractions unrelated to core index interpretation. Source: CHIA index interpretation. Star monthly report analysis. Question 13. In the absence of consistent competitor reporting in a rural market, what is the most statistically sound approach for a hotel analyst interpreting star data? A. Ignore comp set performance entirely and rely solely on brand benchmarks. B. Require SDR to include adjacent urban hotels in the comp set for stability. C. Use rolling averages and long-term trend views while acknowledging data insufficiency. D. Focus on internal KPIs without benchmarking until new hotels open. Answer. Correct answer. C. Explanation. When comp set data is incomplete or inconsistent, analysts should shift to long-term averages and context-based interpretation. STR promotes using 12-month moving averages and segment-based views to reduce volatility. Options A and D remove external perspective. B could introduce mismatches if urban hotels differ significantly. Reference STR data integrity and consistency rules. Question 14. From a practical standpoint, which of the following defines a valid name-back rule as outlined in competitive set management? A hotel is automatically included in competitors set if it's in the same SDR class. B. Hotel may view data from sets where it appears even if it doesn't report. C. Hotel that appears in another's comp set is eligible to see aggregated results of that set. D. Hotel must give permission before its data can be used in comp set. Answer. Correct answer. C. Explanation. Nameback refers to a hotel's ability to see any comp set in which it is included as long as it contributes data to SDR. This ensures transparency and discourages unethical comp set manipulation. It does not require explicit permission. D. Nor does it include non-reporting hotels. B. Being in the same class A has no bearing on visibility to us. SDR competitive set rules and nameback. Question 15. At a convention hotel in Berlin, Istorius analyzes his hotel's ranking on the star report. He sees his property ranked 6th in repart within the comp set of 10. What does this ranking suggest? A. The hotel is outperforming the top 5 hotels in rate and occupancy. B. The property is in the bottom half of the comp set in terms of revenue generation. C. The hotel's EBIT is the highest in the market, driving the high ranking. D. The ranking is based on contract room volume rather than revenue metrics. Answer. Correct answer. B. Explanation. A 6th place rank out of 10 means the hotel is in the lower half of the comp set in repart, an indicator that both occupancy and rate may be underperforming versus competitors. SDR ranks properties by repart, not by room types or contract volume. D. A and C misinterpret ranking data and ignore performance metrics integration. Reference STR ranking interpretation guidelines, star report metrics. Question 16. The relationship between a hotel's location type and its competitive set composition should be based primarily on A. Average guest review scores from TripAdvisor. B. Geographic proximity and product similarity. C. Chain scale alone to ensure consistency in performance. D. Number of rooms and historical ownership. Answer. Correct answer. B. Explanation. Comp set creation depends primarily on location proximity and product similarity, service level, pricing, market segment. STR's guidelines discourage selection based solely on chain or ownership. Guest reviews are subjective. Room count. D is less important unless it reflects market segment. Source. STR competitive set creation standards. CHIA best practices. Question 17. Is Dubois, a development analyst, wants to assess if her brand should expand into the upper mid-scale segment in a North American suburban market. Which SDR data source would offer the best insights into room pipeline activity and long-term supply growth? A. Profitability reports with ratioed sales analysis. B. Weekly pulse report comparing weekday versus weekend trends. C. Pipeline reports showing room counts by brand and phase. D. Star reports using running 12-month occupancy change. Answer. Correct answer. C. Explanation. Pipeline reports break down supply by development phase, under construction, planning, etc., allowing analysts to evaluate future market saturation or opportunity. Profitability. A. Or star data. D. Focuses on existing operations. Pulse reports. B. A short-term and not pipeline-related reference. SDR development pipeline definitions. CHIA supply analysis. Question 18. A critical examination of RevPAR fluctuations during a running 3-month period is most beneficial when A. Weekly reporting is unavailable. B. There is high seasonality affecting monthly comparisons. C. All competitors switch to dynamic pricing. D. Occupancy and that are equal across all months. Answer. Correct answer. B. Explanation. Running 3-month averages help smooth short-term volatility and adjust for seasonal spikes, giving a clearer view of sustained performance. This is especially useful in leisure or holiday-driven markets. Weekly data doesn't affect the utility of 3-month view. C. Doesn't negate the need for aggregate analysis. D. Is unrealistic and doesn't justify the metric's value. Source: CHIA Metrics Glossary. So Trend Measurement Guidelines. Question 19. While conducting a profitability review, Mr. Ammon notices his GOPAR has increased but RevPAR has remained flat. What is the most logical inference from this result? A. The hotel has achieved cost efficiency or improved operational margins. B. ADA has decreased negatively, affecting total revenue. C. The hotel's occupancy rose while its ADA remained stagnant. D. The property added contract rooms, increasing room night volume. Answer. Correct answer. A. Explanation. GOPAR, gross operating profit per available room, can increase even when RevPAR remains flat if the hotel reduces costs or improves operational efficiency. This is a strong signal of improved profit margins. RevPAR stagnation with rising GOPAR is a positive profitability indicator. Options B-D may explain RevPAR movements, not GOPAR gains. Reference SDR profitability report definitions, CHIA financial ratio insights. Question 20. To better understand index percent change over time, what does a positive year-over-year change in RGI most directly indicate? A. The property lost RevPAR share relative to its comp set. B. The hotel has improved its RevPAR performance versus the comp set. C. The market occupancy fell but ADA rose. D. The hotel increased its supply faster than competitors. Answer. Correct answer. B. Explanation. A positive RGI percent change means the hotel's RevPAR has improved relative to its competitive set. This can occur through higher occupancy rate or both. It indicates market share gain in revenue terms. Option A is the opposite. Options C and D describe potential causes but do not directly define index change interpretation. Source: STR Index Percent Change Guide, CHIA Benchmarking Strategy. Question 21. Considering the evidence from a competitive set report, if a hotel's MPI is 110, RE is 95, and RGI is 102, what is the best interpretation of this data? A. The hotel is capturing higher share of market occupancy but at lower average rate than competitors, resulting in slightly better overall revenue. B. The hotel's occupancy and average rate both exceed the comp set averages, but revenue generation lags. C. The hotel has lower market share but compensates with higher average rates. D. The hotel is underperforming in all key metrics relative to its competitive set. Answer. Correct answer. A. Explanation. An MPI of 110 means the hotel captures 10% more occupancy than the comp set average. An RE of 95 shows it charges 5% less than competitors. The resulting RGI of 102 indicates the hotel slightly outperforms the comp set in total revenue per available room, showing that occupancy gains offset lower rates. Other options misinterpret the indices or suggest incorrect performance relationships. SDR benchmarking principles, a CHIA index concept. Question 22. Mr. Gupta oversees an independent hotel in a market where local currency has recently depreciated sharply. Which analytical adjustment should he prioritize when reviewing international SDR reports to ensure accurate trend analysis? A. Comparing raw ADA values in USD without adjustments. B. Using constant currency metrics to remove exchange rate impact. C. Ignoring international data and focusing on local market reports only. D. Adjusting occupancy rates based on exchange rate fluctuations. Answer. Correct answer. B. Explanation. Constant currency adjustments neutralize the distortion from exchange rate changes when comparing revenue and ADA over time, preserving the integrity of performance trends for international properties. Rawest values A can be misleading due to currency volatility. Occupancy D is not affected by currency, and ignoring data C reduces market insight. SER Global Data Guidelines, CHIA International Performance. Question 23. When evaluating a potential change in a hotel's competitive set, which principle should guide the inclusion of new competitor? A. It must be geographically adjacent, regardless of product type or scale. B. It should have similar pricing strategies and service offerings to maintain benchmarking integrity. C. It should have similar brand affiliation to simplify reporting. D. It should be selected based on owner's preference for benchmarking. Answer. Correct answer. B. Explanation. The key to a valid competitive set is similarity in pricing, service level, and market segment to ensure meaningful comparisons. Proximity matters, but is not the sole factor. A. Brand similarity is C. And owner preference. D. Do not guarantee comparable product or pricing, which are crucial. SDR competitive set selection rules. A CHIA benchmarking accuracy. Question 24. Is Lopez manages a resort hotel with high weekday occupancy but low weekend occupancy. How might this pattern affect the hotel's weekly star report indexes? A. MPI and RGI will be evenly distributed across the week. B. The hotel's MPI might be high during weekdays but drop on weekends, causing volatility in weekly averages. C. RE will likely be highest on weekends due to low occupancy. D. The hotel should exclude weekend data to improve star report accuracy. Answer. Correct answer. B. Explanation. Weekday strength paired with weekend weakness creates index volatility. MPI, occupancy based, will fluctuate, leading to inconsistent weekly averages. RE rate may not correspond inversely. C. Excluding data. D. Violate SDR standards for full availability and completeness. Star report weekly data interpretation. CHIA demand patterns. Question 25. From the perspective of supply-side analysis, which of the following best explains the importance of final planning phase data in pipeline reports? A. It confirms projects under active construction with guaranteed completion. B. It highlights projects with high uncertainty that might never proceed to construction. C. It provides insight into near-term supply increases and competitive pressures. D. It replaces the need for feasibility studies on market entry. Answer. Correct answer. C. Explanation. Final planning stage projects indicate imminent potential supply additions that affect market dynamics and competitive strategy. Construction A is later phase. Uncertainty B is more related to planning or pre-planning. Feasibility studies D still require broader market analysis beyond pipeline data. SER pipeline definitions. CHIA development data. Question 26. Mr. Fernandez is analyzing his hotel's monthly profitability report and notices that the ratio of labor expense to total sales has decreased while RevPAR remains flat. What does this suggest? A. The hotel has cut labor costs without impacting revenue performance. B. The hotel is experiencing declining occupancy in the C. Revenue management is not optimizing room rates. D. The competitive set has grown in size, diluting labor efficiency metrics. Answer. Correct answer. A. Explanation. A falling labor expense ratio with flat RevPAR means the hotel improved operational efficiency, reducing costs relative to sales without negatively affecting revenue. Declining occupancy or EDA. B. Contradicts stable RevPAR. C and D do not directly explain expense ratio changes. CHIA profitability reports. It's a financial ratio analysis. Question 27. In the framework of hotel industry categorizations, what primary factor distinguishes class from scale classifications? A. Class is based on physical hotel attributes, while scale focuses on achieved data. B. Class relates to guest service and facilities. Scale is based on hotel size only. C. Class is determined by geographic location. Scale is determined by brand affiliation. D. Class is subjective rating by guests. Scale is an objective metric based on room count. Answer. Correct answer. A. Explanation. Class reflects qualitative features like service level, amenities, and hotel attributes. Scale is a quantitative categorization primarily based on achieved data thresholds, enabling consistent cross-market comparisons. The other options confuse these definitions or add irrelevant criteria. SDR classification standards. CHIA industry categorizations. Question 20. Upon closer examination of the daily star report, Is O'Neill finds that her hotel's weekend index is significantly lower than weekdays despite strong weekend occupancy. What strategic insight should she derive? A. The hotel should increase weekend pricing to maximize revenue. B. Competitors likely discount on weekends driving down at a C. Weekend demand is price insensitive, allowing for ad hikes. D. The hotel should reduce weekday prices to balance the index. Answer. Correct answer. B. Explanation. Low weekend ad index despite strong occupancy often indicates competitors' discount rates on weekends, pressuring pricing. Option A could harm demand if price sensitive. C incorrectly assumes demand insensitivity. D is unrelated to correcting weekend ad index issues. CHIA Star Daily Report Analysis. Revenue Management. Question 29. From the perspective of benchmarking in competitive sets, what is the rationale behind the minimum number of hotels required to report data for a valid comp set? A. To ensure statistical reliability and protect confidentiality of individual hotels. B. To increase the competitive intensity of the market segment. C. To align with brand reporting requirements. D. To limit the size of the comp set to national averages. Answer. Correct answer. A. Explanation. SDR requires a minimum number of reporting hotels, typically 3+, in a comp set to ensure statistical validity and to protect individual hotel confidentiality by avoiding data disclosure from too few participants. It is unrelated to brand rules. C. Competition intensity. B. Or size limits. D. SDR confidentiality and sufficiency rules. CHIA data integrity. Question 30. During a pipeline analysis, Istacata notices a significant increase in pre-planning projects but no change in or under construction rooms. What can this trend imply about the market outlook? A. Developers are confident and construction will begin imminently. B. Market uncertainty or regulatory hurdles may be delaying project starts. C. Demand for hotel rooms is rapidly increasing, prompting immediate supply growth. D. Hotels are being removed from the market through demolition. Answer. Correct answer. B. Explanation. An increase in pre-planning without rise in under construction indicates projects in conceptual or early stages that may face uncertainty, funding issues, or regulatory delays before progressing. Immediate construction may or demand-driven growth. C. Would reflect increasing under construction numbers. Demolition. D. Relates to supply removal, not pipeline phase. SDR pipeline reporting. CHIA market analysis.